Good morning, ladies and gentlemen. Welcome to my financial accounting class. The topic for our discussion today is on earnings per share. Earnings per share is covered under MASB 13, and MASB 13 comes into effect on the 1st of January 2000. We need to say that all enterprises that prepare financial statements that cover periods from 1st of January 2000 onwards will have to comply with MASB 13 as far as the computation and presentation of earnings per share is concerned. Now, before we look at the objective of the accounting standard, it will be useful for us to reflect what is the significance of earnings per share. Any one of you have any idea about what is the significance of earnings per share? Perhaps you have learned this from your finance class. Encik Bahar, do you have any suggestions? What is the significance of earnings per share? Yeah, that's right. So because earnings per share is often used by investors to compare and to evaluate the company performance. Okay, so that's why earnings per share information is very important. And on top of that, EPS is also used as a basis for a PE ratio computation, which is a widely used stock market indicator. And on top of that, EPS is also used to value shares of a company for investment decisions. Now, having understood what is the significance of EPS information, so perhaps let us now take a look at the objective of the accounting standard. Okay. Now, the objective of MASB 13 is that it prescribes the principles for determination and presentation of EPS. I repeat, MASB 13 prescribes the principles for the determination and presentation of EPS. Now, what do you mean by use to prescribe the principles for determination and presentation of EPS? For example, when you compute EPS, do you use the profit before tax, or you use the profit after tax, or do you use the profit before minority interest, or you use profit after minority interest? That's what I mean by principles for determination. And for presentation, now what do you mean by presentation? For example, do you present the EPS in the notes to the accounts, or on the face of the income statement, or in the balance sheet? So all these are standardized and stipulated in MASB 13. Okay, and on top of that, let's say if a company made a loss, does the company have to disclose loss per share? So all these are discussed and stipulated under MASB 13. Okay, so now the reason why you have MASB 13 is to improve company performance, so that all enterprises that present and to compute EPS, they follow a set of principles, so that when you look at the EPS of different enterprises, you know how to interpret accordingly. Okay, so that is the objective of MASB 13. Any one of you have any questions so far? So then I go on. Okay. Now, having gone through the objective of the accounting standard, so perhaps the next relevant question that we want to ask ourselves is, who need to comply with MASB 13? So proprietor, business, partnership, Sundram Berhad, or public companies. Okay, so that is the scope. Now, MASB 13 stipulates that for all those enterprises whose shares, ordinary shares, or potential ordinary shares that are publicly traded will have to comply with MASB 13. So we need to say that all companies that are public listed in the stock exchange will need to comply with this standard. Failure to do so, the auditors can qualify the financial statement. So therefore, it applies to all public listed companies. Is that clear? Okay. Now, one interesting aspect to note is that not only those companies whose shares are publicly listed in the KIC, even though the company shares have not been listed, but if they are in the process of issuing those shares, let's say a company have a prospectus, okay, and they are inviting the public to subscribe to the shares. So that even though the shares are in the process of issuing to the public and to be traded in the public securities market, the company will also have to comply with this standard. Okay. Now we have gone through the objectives and also the scope. So perhaps the next thing that we come to the essence of the matter is to compute the EPS. Okay. Now, the computation of EPS is quite straightforward. You obtain EPS computation by dividing the net profit after tax, after minority interest. Is that clear? You get the net profit after tax, after minority interest, attributable to the ordinary shareholders, and divide this figure by the weighted average number of shares. Okay, so it is obtained by the net profit attributable to the ordinary shareholders, and divide this figure by the weighted average number of shares. Now, why do we need to look at the weighted average number of shares? For instance, a company may have issued shares for cash sometime in the middle of the year. Let's say issue 1 million shares in the middle of the year. You cannot take 1 million shares for the computation, you see, because this 1 million shares were only issued in the middle of the year, so therefore you have to take the weighted average factor. So when you say you take the weighted average factor, it means to say weighted by time factor. Now it's also applicable, let's say in the middle of the year, the company buy back their own shares. So therefore, you will have to work out the weighted average number of shares. Let us have a simple example to illustrate this principle. Let's say the company on 1st of January 2002, the number of shares outstanding is 1,007. Number of shares outstanding on 1st of January 2002. Okay? And on 31st May 2002, number of shares issued for cash. Okay? Number of shares issued for cash is 800. So therefore, the total number of shares is now 2,005 as on 31st May 2002. Okay, and then on the 1st of December 2002, the number of shares bought back by the company is 250. So therefore, the number of shares outstanding reduces. Now, given this scenario, how do we compute the weighted average number of shares in order to work out our EPS for the purpose of computing our denominator? Okay, so the computation is quite straightforward. It is weighted average number of shares is equal to 1,700 for how many months? Class, for how many months? For 5 months, isn't it? Correct. So multiply by 5 over 12. Okay. And then we have increased the number of shares to 2,005. Okay. So therefore, now we have 2,005. Okay. From May to the end of November. How many months are there? 6 months, correct? 6 months, huh? Okay. So times 6 over 12. And then the company buys back 250. So therefore the number of shares reduces by 250. So you have to add the 250, but it's only for 1 month. Okay. So in this case, the weighted average number of shares is 2,146 shares. Okay, and this will form our denominator. Is that clear? Okay. Right. Any questions before I proceed further to compute the basic EPS? Now we have gone through the concept of weighted average number of shares, and we have also learned the formula to compute basic EPS. And of course, the next important thing is for a company to disclose will also be the computation of diluted EPS. Now, under what circumstances does a company have to compute diluted EPS? That is where the company issues ordinary shares, and at the same time, the company has also issued potential ordinary shares. Now, what do you mean by potential ordinary shares? Potential means to say that they are not ordinary shares, but they have a potential to become ordinary shares. Okay? So, for example, in the case of a company that has issued convertible debentures, okay? So therefore, at a certain time, the holders of these convertible debentures, they may have the right to convert the debentures into ordinary shares. So therefore, you find that the denominator will become larger, isn't it? Correct or not? At the same time, it will also affect the numerator. Let's work it out, okay? Now, diluted EPS, how do you work out the diluted EPS? Again, it's based on the same formula, but this time you have the adjusted net profit divided by the adjusted weighted average number of shares. Okay, so you have to adjust the numerator as well as the denominator. Now, under FASB 13, it is mentioned that when you compute the adjusted effect, it should be the after-tax effect. It should be the after-tax effect. Okay, so let us go through this principle by a simple illustration again. Okay. Now, given this basic information, okay, now you have, let's say, net profit for the year. Net profit for the year is 1,004,000. Okay, that is the net profit, and you have ordinary shares. I hope you can follow the simple form, because the whiteboard is limited in space. Okay, so the ordinary shares outstanding is 1 million. Okay, at the same time, the company has issued convertible debentures. Okay, so you have convertible debentures. Okay, which is 100,000 debentures at the interest rate of 10%. At 10% interest. Okay, and you are told that for every block of 10,000 debentures, it can be converted into 3,000 ordinary shares. Okay, and since now MASP 13 say that you have to take the after-tax effect. Okay, so you're given income tax rate of 40%. So you have this simple scenario in front of us. Okay, so what is the basic EPS? So basic EPS will be equal to what is the numerator in this case? It will be 1,004,000. Okay, so it is 1,004,000 divided by the number of shares outstanding, which is equal to 1 million. So approximately is equal to 1 ringgit. Okay, so this is the basic EPS. But since the company has a class of convertible debentures, so therefore the company will also have to compute and to disclose the diluted EPS. Okay, diluted EPS is given by adjusted net effect over adjusted weighted average number of shares. So now let us concentrate on the numerator. Shall we? Shall we concentrate on the numerator? Okay. Now, when the convertible debenture holders convert the debentures into ordinary shares, am I too fast for you? Can you follow? Yes. Okay. Now, when the convertible debenture holders convert the debentures into ordinary shares, so what is the effect on the numerator? The net profit will of course increase or decrease. Will of course ask me, will increase, isn't it? Very good. You're paying attention. All right now. Okay. Right. Will increase. Why? Because then the company will not have to pay any more interest, isn't it? Correct or not? Because when they convert into ordinary shares, then the company will not have to pay any more interest. So therefore, so now the saving. Now we have already done with the basic EPS. Okay. So now the interest expense saving is how much? How much interest do you save? Convertible debentures is 100,000 at 10%. So therefore, your interest saving is how much? Straightforward. It is equal to 100,000 times 10%. They give you, they give you 10,000, isn't it? 100,000 times 10%. But don't forget the tax effect, because you have to adjust by the after-tax effect. And interest expense is a tax deductible expense. Okay. So therefore, the related tax effect is equal to 10,000 multiplied by how much? What is the income tax rate, class? What's the income tax rate? 40%. Okay, so multiply by 40%. So they give you 4,000. Okay, can you follow up? I think the whiteboard is quite limited in space, so you have to follow the flow of the working. Now, next, from here, interest expense is 10,000. The related tax effect is 4,000. So therefore, now from here, we can look out our numerator, which is the adjusted net profit. Adjusted net profit. What is the original net profit figure? 1,004,000. Okay? Alright, so that is equal to 1,004,000. Okay, plus the interest saving, which is equal to 10,000. Okay, but after tax effect, so minus 4,000. So this becomes our new numerator, 1,010,000. Okay. Now, having worked out the what we call the numerator, and now we work out the adjusted denominator. Okay, so I don't think we need this anymore. Okay, we rub this off, right? Okay. Now, as a result of the conversion of the debentures, okay, so therefore, the number of ordinary shares would have been decreased, isn't it? Okay. So, let's work out the number of shares, from debenture conversion Now, right now, we have 100,000 convertible debentures. Okay? But we know that for every 10,000 debentures, it can be converted into 3,000 ordinary shares. Okay? So, the number of shares from debenture conversion is therefore equal to the total number of debentures, which is equal to 100,000 divided by 10,000. Okay, and for every block of this, you will get 3,000 ordinary shares. Okay, so therefore, the number of shares from debenture conversion is equal to 30,000. Right? So we know that there are 30,000 shares will be issued upon conversion. So now we can work out our diluted EPS. Our diluted EPS is equal to the numerator of 1,010,000 divided by the new number of ordinary shares, which is equal to, right now, the number of shares outstanding is 1 million plus how much? 30,000. Okay, so that's equal to 1,030,000. So can give you 98 cents. So can you see that the EPS, the basic EPS is 1 ringgit. As a result of conversion, the EPS has become diluted and become 98 cents. Is that clear? Okay. Of course, we still have examples to illustrate on the share options. So when the share option holders, when they exercise the option, okay, so when they exercise the option, there will be more shares issued, isn't it? So again, that will give rise to diluted EPS. But I'm not sure whether